All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. Hope you guys are having a great trading session. Happy Tuesday to you. Remember, it is Tuesday. Means it can always be turnaround Tuesday. You know how the old saying goes, especially if you guys are long risk. You got to be careful here. We're approaching 127% extension on just from a intraday perspective on the E-mini futures, and also relative strength is diverging pretty good on the daily chart. So let's keep that in mind as we move forward. All right, let's start off with our analysis. We're going to go through all the majors. If you guys are new to the Morning Edge and this is like one of your first times, I want to welcome you. I've been broadcasting for 13 years. Myself and Kip Cohen, and we started with the Wise Trade webinars in 2002. They weren't even webinars. Webinars didn't really exist at that point. It was an audio broadcast. You used to actually go to our website, and there's a link under training. I have this little training link and this little link, and you click on it, and you could listen to us have an audio. We had this little soundboard. It was pretty funny. A little soundboard with a bunch of little knobbies on it. We used to have to run next to the our computers, and it was great. Anyway, but we've been broadcasting since then. It eventually evolved into Traders Television, which we were on Dish Networks for 4 years. If you guys know Dish, if you're here in the United States, we were like, I don't know, station 260 something. It was a subscribe to channel. And I remember when we first went to Dish, and I had a Dish installed at my house. This is back in like 2002, or no, 2004, maybe 2003, 2004. It was fun. It was good times back then. But then we eventually evolved into a webinar, which we are right now. But anyway, glad you guys are all here, and we do broadcast from this point forward. And when I start, we actually broadcast until the equity markets close. We do take an hour break during lunch or after lunch, like 1:30 to 2:30. Excuse me. But anyway, glad you all are here. So here's the euro dollar. We came out of our ascending wedge. As expected, we've been sitting here looking at the ascending wedge and descending wedge in the dollar index, and as I told you guys a few times over the last couple of weeks, there's about a 70% chance we break lower, 30% chance we break higher. Obviously, the majority came into play here. So now that we're breaking lower, the question is, what do you do? Because when you got an hourly chart that says, whoops, I didn't want to do that. I'm just trying to get rid of these lines here. Dang it. All right, just give me a second to do that. Okay. So after you break out of this ascending wedge, the question is, well, what do you do? Do you short it here? Hold on, I'm almost gonna get stopped out of my cable. I guess I got a little oh man, it just missed. I'm within just about a couple of pips of getting stopped out, so just missing my orders. My order's at 82. Actually, let me tell you exactly where my order is. That missed me by 82 and a half, 1.54825. That missed me by, yeah, I'm probably going to get hit. That missed me by literally 1.1 pips. Yeesh. Yeah, I'm probably, like I said, I'm probably going to get stopped out of that one. Anyway, dollar yen new highs. Okay, anyway, as I was saying, I don't think you want to chase the dollar down here, but I don't want to buy it. When you're coming out of an ascending wedge, I don't want to try to catch a falling knife. What I want to do is try to sell rallies. So the question is, how far are we going to go? So if you just take like the low here, a spike low to the highs, okay, we really don't even have much support here. Let's see here. Let's take that low, because that's the breakout point. You see that 210 or 210. 110.50. That's the breakout point. So that's where we came back and retested it. So that's where I want to gauge my this move. And you can see this 786 is supporting us right now. That's 1160. I want to say that's support, but obviously we can drop below that. But I'm going to write down right now 111.60. If you guys are going to try to trade counter trend, you can try to get long here with stops below 111.60. Okay, but that should be support today. It should be, at least until the economic data comes out. If the obviously if the housing data comes in much stronger than you expect, then remember it was cold weather. It was a cold winter. Well, not here in Phoenix, but in general, it was a cold winter, and so the housing data may be a little stronger, as for the spring. That's what economists are expecting. But if it comes out even better than that, you might get continued dollar strength. All right. Flip side is if that data comes in weak, we're bouncing back. And if we bounce back, the question is how far are we going to bounce back where we can look to sell. So for me, I'll just take this. Let's just say this is the low. Argument's sake, let's just say that is the low. All right. So any rally back now to 112.70, that's a 38% retracement. That's also previous support on the hourlies. That is going to be a selling opportunity. Okay, you can see this reactionary area, right? Here, here, here. Coffee needed. I'm going to be so lucky if that pound just missed my stop by 1 pip. Anyway, reactionary area is right here at 112.75. That is resistance, 1 at 12.75. We are back to a range environment in the euro dollar. Remember, we had been bullish for a while until we came out of that ascending wedge. And now that we've come out of that ascending wedge, we're back to range trading. So with range trading, you just want to sell rips, buy dips. That's a pretty decent strategy. All right. So let me see if we can get back up to 112.75. I'm going to use that as an opportunity to be on the short side of the euro if we can get up there. All right. I'm more upset the fact that I'm not short the euro dollar right now because I wanted to short, like Pauly. I completely agreed with Pauly. I'm like, I'm looking to sell. I was looking to sell the open of this week, and I was hoping for a little bit higher. I was hoping up towards 114.80 to get one more stab higher to get on the short side of the euro. But the fact of the matter is we stopped right here. I have to go back to the weekly chart. Actually, I'm sorry. We came right back to this this low from January. We went as low as 114.60. That spike low there, that was resistance, and we came and hit it within 5 pips in reverse. I was trying to squeeze a couple more pips out of it, did not work, and so unfortunately, I'm going to get caught chasing the euro. Not chasing necessarily like I want to short it here, but I have to, I'm not going to be able to get those high prices. I'll have to sell any type of rally. Excuse me. Okay. So with that being said, so there's a resistance. We got that. Let's go over to the cable. All right. So the pound. So the pound just probed through probably a lot of stops. This is the buy area. This is a buy zone. You get the high price over here at 155, 154.97. So basically 155. the highs over here, 155.22. Remember, the 38% retracement of this move came in at 155.35 or 155.30. Take that fib and move it all the way down. You got a 24% retracement right here, 155.20. Give or take, we're pretty much in the area or in the vicinity. Stand by. Okay, so I guess the question is, how far are we going to go down? I figured we'd go below 155, or there was a possibility we go below 155 and trip some stops, and apparently that's what we've done. The low that we've hit thus far, 154.83. So 154.83. I'm going to write down 154.50. I'm going to make the assumption that we can come down to the 50% retracement. 154.50. Okay. I'm going to make the assumption we can come down there today, especially if we have some strong economic data out of the U.S. All right. Now, resistance in the cables, any move back up to this previous support level. So any move back up to 150, what is that, 156.40, 156.30. Any move back up to 156.30, you have to, thank the FX gods for getting up there. Okay. Now we're back to more of a range environment now. Again, pound is very similar to the euro. We come out of the ascending wedge. We've come out pretty aggressively. So now it's going to put us more in a range type of environment. We're testing previous support, or excuse me, previous resistance. It should act as current support around here. Like I said, I got long a little bit. I bought it at 23, 155.23. I'm out of the money 24 pips. I just have a half size position. I don't mind trading around these levels, letting it move a little bit. I don't know how long I want to stick around though. I might even be happy with a flat if we get a little bit of a bounce ahead of economic data. I'll see how it plays then. All right, let's go over to the Swissy. So the Swissy, one of the things that you have to keep in mind, and this is the one thing that I have warned you guys, is that as Greece comes back into the limelight, as it is this week, that's spooking traders, and you can see it really come into the Swiss franc, and you can really see it come into the Euro Swiss. The Euro Swiss is actually reversed today. You can see how aggressively it's reversed. The Swiss is coming back into demand, so you got to. That's the biggest problem if you're going to short the Swiss franc, is if any bad headlines come out regarding Greece, you could very easily see the dollar Swiss right back down towards 92 cents, pretty easily. So right now you can see this is resistance, and it's really formidable resistance, regardless of the euro. As weak as the euro is, it's going to be even tougher for the dollar Swiss to make it above this resistance. It comes in at 93. That's whatever the highs are, 93.60. So 93.60 are the highs. 93.60. Okay, and that's going to be key resistance. Okay, support. Very easy to read. Very easy to read. It's going to be that low. Okay, you can see very responsive area. That low comes in at 92.45. Stinks. We're going to be back in a range environment across the board again. Stand by. Okay. Let's take a look at the yen. The yen, we are still in our very crappy range. So I'll say this and we'll say it again. I'll say the same thing as I said yesterday. Somebody wake me up if we break above 120.30 or we break below 119. Okay, so just keep extending those lines here. Now, we're getting close to 120.30, so this probably is not going to be a bad short up here. I might actually short the dollar yen if we get up there. 120.30 to 119, and for the 6th or 7th month in a row, 20 for the 7th or 8th month in a row, range. Still in a range. No fun. Leave the dollar yen alone. Okay, dollar Canadian. Now the Canadian, as you guys know, I'm long the dollar Canadian. I'm enjoying it. It's a you know it's been a really good trade. I picked it up. My cost average is 120.39. I was sweating a little bit when we were down here at 119.30. I mean, but I blogged about it because of the false breakdown range, and this is just the lower end of the range. So I was happy we just didn't break below there. Upper end of the range is going to be 123.50. I'm have an order to sell my dollar Canadian at 122.50. I'm going to readjust that to 123.5. I think one of the things that's going to help the one of the things that's going to help the dollar Canadian move higher is crude oil. Crude oil looks weak, and crude looks like it has the potential of dropping back towards 55. If you guys remember the double top that we have in crude, the target comes in around 55. If that happens, that's going to help the dollar Canadian back up towards 123.5 and maybe even higher. But that's going to be my target. It's just, trade going from one range to the next range. Now, that doesn't mean we're going to hit it that today. But the dollar Canadian, I was telling the guys and the gals in our chat room yesterday, like, you can't fade the Canadian because we rallied 160 pips and we barely gave up anything. I mean, that's very bullish price action. When you rally for no reason, I mean, there was no economic data yesterday that told us the dollar Canadian should be up 160 pips. There's nothing. But what it did not do is it did not give it up. It did not give up those gains. We rallied yesterday, we broke out, then we maintained those gains. Pull back, very, very minor, and then, we're strengthening again. So the question is, how high can we go here? And, we do have 122 resistance, which is holding us up pretty well. So let me get rid of this stuff. Let me get rid of that 200 period moving average. Let's get rid of that. That doesn't matter. Let's get rid of that. That doesn't matter. Let's take that and let's do this. So 122, obviously spike highs, resistance. That's really key. If you take .38% retracement of this entire move, it goes from the high around 28.50. That comes in at 122.70. So if we can scale 122, 122.70 is and seems very doable. 50% of the range would be the range highs, which would be 123.78, or basically as we get back to 123.50. So 122, 122.70. Let's go 122, 122.70, just in case the dollar continues to rally today. We are in a range. Now, we've got a pretty decent move coming out of the range, but I mean, we're still in a range. Nothing's changed much here. So Where are dips going to be bought? Because you have to imagine there's people that are short the dollar Canadian right now and they want out. They do, right? You're short. You're like, oh crap, this thing's going up in my face. I hope we don't squeeze above 122 because if we do, it's going to hurt really bad. So any dip now, I'm trying to get out. If you think about those people that are trapped on the short side, they're probably going to be really happy if they can get out here. So 120.65, I'd imagine bids are sitting around here on traders trying to get out of their shorts, right? So any dip 121, 120.65. Okay, that's where the buyers are going to be. All right, let's go take a look at the Kiwi. So the Kiwi, like I said, I'm not. When the inflation expectations came out yesterday, I was like, hey, wait a second. Those inflation expectations are ticking higher, yet producer prices are coming down. That suggests to me that they are starting to, the official the projections are starting to account for the RBNZ lowering rates, which again is inflation stimulative in the future. So I know that the Kiwi's up right now, but I don't know if the Kiwi's going to stay higher. I think you start putting two and two together, you start thinking, wait a second, why are inflation expectations rising? Because it's not going to be due to the deflationary pressures that China's feeling right now. And it's not going to be due to you're not going to feel inflationary pressures um, due to the macro prudential policies that the RBNZ is implementing to slow down the housing market. You should actually have the opposite. So the only way that you're going to get is higher inflationary data over the course of the next couple of years, if all the trends stay the same, is really just lower rates. So if you cut rates, so again, I'm not a big. I know we bounced pretty good yesterday, but I'm not 100% convinced. Now, what I did yesterday at the end of the day, I deleted everything that I had up here. Now, you might have remembered I had these drawn up here, right? I can probably put those back so we can see. Oh, no, that wasn't it. I didn't want to do that. Right. Um, and so if you take a look at the Kiwi, we're being pretty well supported on what may be viewed as you know, a pretty symmetrical triangle, which would be a continuation pattern too. I mean, if you got a sell-off triangle pattern, they tend to be continuation patterns. So that means the eventual move should be lower. That doesn't mean we can't bounce around for the next couple of weeks before we break down, though. I mean that. In all actuality, that could happen. I think a lot of that relies on the dollar, though. It depends how strong the dollar gets. If the euro, which is trading at 112, if the euro is trading at 108 here in the next couple of weeks, the Kiwi is probably going to be trading at 71 cents. But what we are doing is, again, we're drifting lower here. You're seeing a little bit of divergence because of the economic data overnight, but overall the Kiwi is fairly weak and we're not too far off of support. So for today, your 786 is holding here. So this is going to be really key support, which comes in at 73.60 or 50, whatever it was. 58, 60. So we'll just call it 60. Okay. 73.60 is support. Oops. And resistance, I thought we would stall at 74.20. That was our number we wrote down yesterday, right? We wrote down this number. We obviously overshot it in Europe at some point. I was sleeping here when that happened, but um, imagine there's a gap to be filled here, weekend gap that needs to be filled here at 74.70. Now we also have dairy auction results too. That comes out a little bit later today. Keep that on the radar, just because remember, the dairy is a product of a dairy demand is a product of Chinese um, um, Chinese uh, demand because of a strong economy. As China's economy continues to slow and GDP slows down to 7%, and I think even will slow down more than that, dairy consumption is going to continue to slow as well. And remember, New Zealand is highly dependent on China. China is New Zealand's largest importer of goods. Okay. It used to be Australia, but now it's China. So now New Zealand is very, very dependent on what happens in China. I've always been wondering, at what point are their Chinese numbers going to affect New Zealand more so than the Aussie? That hasn't been the case, but it'll be interesting to see if that ever happens. Anyway, I guess the point I'm trying to make here is these dairy auction results have been pretty volatile as of late, and can produce some moves here. We'll mark up right now. 74. What is the high overnight? 74.42. Spike high over here is 74.47. So 74.50, and then 74.45, and then 74.70. A couple levels of resistance. I'll put you guys on break here. 0.7445, 0.7470. Okay. And we are still in a range environment in the Kiwi. All right, I'll be back in a few moments. I'm going to go get myself some more coffee. So when I come back, we'll continue on with the Aussie, the dollar index, and we'll take a look at any of these other, like maybe the peso, the Nordic currencies, anything else that you want to look at. I'll be back in a few moments. Don't go anywhere. Thank you all for being here. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope you guys are having a great trading session. So we're going to finish up with the Aussie and the dollar index really quick. So let's go over to the Aussie dollar. And the Aussie's really sitting on, yesterday we had we drew this trend line here. And so I'll just be clear. Here's this megaphone pattern, and let me get rid of this trend line here. There's this megaphone pattern that we have that we're adhering to, and right now we have this trend line that is really holding us up, but a break below, a real significant break below, that's going to open up some downside with the Aussie, especially if we're doing this megaphone pattern. Megaphone patterns are notorious for just the bottoms dropping out of them. That's the thing is we have, as you can see, it's widening. So if we break 79.50, I mean, really that can open us up all the way to, let's just call it 74 cents. It's a big drop from where we're currently at. I mean, it could very easily happen. So if you focus in on a little bit more, near term, here's that trend line that we're dealing with, and I'm gonna get rid of these arrows because I drew them out yesterday. But notice how we're just sitting here. Oops. We'll put in that fib level here in a second. So this is really important, I think. And you can see yesterday yesterday, did we write down 79.50? So what did we write down? Does anybody have the support from yesterday? 79.50. Alan said 79.50. Okay, that Okay, thanks, Nick. So to so we did go to 79.57, and so 79.50 is obviously going to be pretty key here. It just I know we're really close, and if we have some strong economic data today out of the U.S., it's an if, but if we do, that's probably going to be a decent short. It's going to be the Aussie. Resistance, Alan said, way off as usual. Thanks. Um, I want to say we're wedging, but I don't believe we are. I mean, we may be very slightly, but I don't know. Well, at least by knowing this trend line here, at least by knowing this trend line, we know that 80 cents is a big deal. So if we do break 80 cents, that'd be pretty bullish for the Kiwi or the Aussie, excuse me. Fortunately, we're just kind of ranging. Um, so the good news is it's very tight, very, very tight. I mean, we have a 50 pip range that we're look at how quiet the look at this hourly chart. My God. Um, Tight ranges, very tight ranges. Okay, let's go into the dollar index really quick. So here's the dollar. Now, looking back, obviously hindsight's always 2020, but looking back at how important the support was, okay, I think uh, who Raphael, who was I don't know if he's here listening in right now. He had said this yesterday, and I recall because I didn't think we could push up here. I don't know if he's here this morning, but the we had double bottom, and it looks like we extended actually that double bottom really well. So here is the double. I remember him saying something like that. He says, late but here. Oh, Raphael, you're here. Okay, very good. I recall him saying something about, I recall you saying something about double bottom here, and it looks like it played out quite nicely. I thought we were going to stall at the, I really didn't believe we would break the, no, no, don't do that. Damn it, man. Okay. All my stuff is still there. I really didn't think we were going to break out of this descending wedge today. I thought we were going to consolidate a little bit more and break out either just ahead of, the FOMC meeting minutes tomorrow or after the minutes. But we did it, and we have hit the double bottom extension, so that's good. Like I said, I really didn't think we were going to be able to do that, but we did it, and so there's the. You know what? I'm just going to do it like this. Clone. So that extension took us up to about 94.80, 94.90, but we extended it and then some. So I guess the question is, where are we going to go from here? And so remove that, remove that, remove that. So now any dip back down to this trend line, which would be 94 and a quarter, that's going to be that's going to be a long opportunity. Question is, are we going to get down there? Because I'd like to be a buyer down there. I just don't know if we're going to make it. Okay. Um, Resistance. Well, that spike high right there. It comes in at 95 and a quarter. Let me try something else. Hold on really quick. Let me get rid of this fib. I don't want those colors around. Okay. Now we're in between now. See, that 38% fib doesn't even come into play really until a lot of this previous support. You know, the thing is the dollar's got some room to run. If it, oh, I just got stopped out of the cable. All right, guys. So just let you all know I'm stopped out of the cable. Should be free to go up now. I think they lost like 34 pips there. You son of a gun. That's why I don't trade the cable. That's exactly the reason why. So anyway, you notice the 38% retracement here. Oop, I didn't want that. This 38% retracement comes in right there. And you got this previous support. So this would be like the sell zone for the dollar. I just don't think we're going to get up there today. So today resistance is 95 and a quarter. We are still in a range. Okay. Let's take a real quick look. I want to see, well, let me glance at the Nordic currencies. So the Swedish krona, God, Swedish krona is so strong. A lot of people fading these too. Lots of people fading these, which this is one of those currencies that has not pulled back much. I mean, if you think about this rally that we've had here in the Swedish krona, and you had the euro, you know, the euro pulled back basically 38%. The Swedish krona barely even pulled back 24, maybe 24, 25%. Very, very strong. US dollar, Norwegian krona. Not a whole lot happening there. It's holding up pretty well. Peso. Peso probe just at 15 and bounced back. So, yeah, I don't think there's a whole lot to do with those at the moment. But here's your majors, and then what I'm going to do is I'm going to take some questions because we have economic data coming out in about 15 minutes. So let's go. Let's start with